Hello guys. Let's move on. We are moving to the second chart now. We're going to do the same thing that we did on Nasdaq. If you're new here and you haven't watched the video on Nasdaq, so basically what we do on this channel every Sunday, I analyze Nasdaq, US 100, and sometimes I do VIX 75 as well, so that I just show you what you can expect from these two or these three for the coming week. So make sure that you subscribe and hit the bell icon. Let's get started. So I don't think the video on this one is gonna be that long like I did with Nasdaq, because the Nasdaq one was very detailed, because what, they are related. So I won't spend a lot of time on this one. So let's get started. So we always start at the top, we work our way down. We do what we call top-down analysis. So it's important for you to start at the top, because even if I know I'm going to be executing maybe on H1 or H4, I still need to know what weekly is saying, because sometimes if I just go straight to H4, my execution time frame, I'm most likely gonna miss the information on the higher time frames. So which is why we're gonna start here. So what we have here, we have the area of support, the price is coming from that, and the area of resistance. So if I'm trading weekly, monthly, I know that the support gained control and is trying to reach for the resistance. That's all that you need to know from this time frame. Let's move down to weekly. On weekly, we did have the same thing, that area of support inside the monthly that we just spoke about now. And now the prices, as always, you need to mark the level above and the level below. When the price was going down, we had this as the bearish trend line, and we had this as the nearest support, and we have this as the nearest resistance. So this is your support, this is your resistance. You can see now that on weekly, the price hit that monthly, it hit the weekly inside monthly. It was trying to reach for the weekly area of resistance, and as much as it was doing that, I always tell you about, the price can still struggle to pass the trend line, which means if you are trading here, you can't just say, I know the price is trying to reach for resistance, then I'm going to ignore the trend line, because sometimes the price can just come back from the trend line, which is why you need to know which are the key structures on your chart, so that when you are placing your take profits, you take them into consider them, so that the price, it might struggle to pass them, which is why when you're placing your your TP, you need to make sure that you take these ones into consideration. So there is your resistance hitting, gaining control, then there is your support, and you can see now the trend line has been broken on this time frame, meaning the weekly trend line has been broken, right? So it means the move from this new area of support is the one that pushed up until the area of resistance, and it broke the trend line. That's what we are saying. So should the price come back here, this is a very strong, it will be like a retest and then continue like that. So hopefully, but we're not saying the price must go all the way down like that, but we're saying if you are holding buy trades, you need to be exiting, because now the weekly area of resistance has been hit. So the price can just pull back before taking off. Sometimes it will break like that, but we don't know what's going to happen. All we know is that the price is now at a very critical area, which is why it is important for you to exit, right? So that's all that you have. So all you have to do on this chart, or to mark on this chart, it will look more or less the same as what we already have on Nasdaq, guys. So you can, let me see, it's up to you. Now this is where it gets interesting. Someone can say this is the lowest point, we went up, and then pause, we went up. That's also fine. So if you want to go with that, it means you'll have to put your thing here. You'll have to put your zone there. But for me, I'll say I'd rather, take this as one swing low, so that I can have my thing there, my zone there, because even if I put it here, it still accounts for that pause that we had there. They are more or less the same, around the same point. So I'll still take it like that, because reason being that if I put it like this, it's like it looks wrong now, because I just left this point out. So I'd rather just look at this as one swing low, so that I can mark it as one area, and we can also mark our area of resistance, so that you can see there that it has gained control. The trend line, we said, it has been broken, so you can put your new bullish trend line. If you are saying this is it's up to you, guys. If this looks like a swing to you, there's a trend line. If this looks like a pause to you, that's not a trend line. because a pause we can't use it to draw the trend line. So for me, it looks like the price did go there and then come here before taking off. So I can take that as a swing low, so rather than a market pause. So meaning I can have this as my new bullish trend line on weekly. So let's go down to daily, and so that's why you just need the zone above and the zone below. We are not saying these are not key areas, they are, but it's just that currently the price is still very far from them. It doesn't help in me marking this level area of resistance, because it's just gonna create a mess on my chart, of which is not even gonna help me to take trades currently. The price must break this one first before I can forget about it and focus on the next one, so that I only have like a zone above and the zone below. That should give me enough information to know what the price is trying to do. Let's go to this is still our the weekly trend line, this one here. Let's go to daily. On daily, we did have like a nice area of resistance here, which is the one that initiated this strong move with the pauses and going all the way down, breaking this area of support here. This was the area of support because it gave us a move and broke the trend line that was there and broke the resistance. But now the new resistance that was formed there came that down and broke that, which means this is a very area of a strong area of resistance because of what it did. So that's why I'm saying if you're having buy trades, you need to think twice. So it's up to you now. You see, this is where it gets interesting, because sometimes there are movements that can look like a swing, they can look like a market pause. So you can say this is a like a pullback like that. So which means you had your trend line in there, but now because we have a higher high, if you're looking at that as a swing, you're gonna have to find a way to accommodate like that and say there's my daily US30 trend line. And in terms of the nearest area of support, because remember this one is too big, it shows that it does not belong here. We can remove it. We know we're gonna put it back when you go to weekly. We know where it is. The price is still far from it. We just don't want to have a mess, so we can just say we have a nice area of resistance there on daily, which is inside the weekly one, and it has gained control, right? So meaning buying is no longer a good option right now. And where is the nearest area of resistance on daily? Always you need to know where is the nearest area of resistance. So here there's too many candlesticks, so it might be tricky to draw it, but for me I'll put it here. I'll put it there. Even if you draw it like that, it's fine. What is important is for you to know where exactly these points are. If you can identify that this is the area of support, then drawing it, it might differ a bit, but for me this is how I'll put it. So meaning this is the nearest area of resistance on daily and the nearest area of support on daily, and the trend line. The price is struggling to break the trend line. Even if you get reasons to sell there, we're not saying, this trend line is still there. The price might still struggle to break it, but you're not gonna try and buy because this is weekly and this is daily that you're looking at. But the zone here, the price is coming from weekly, so trying to buy there is no longer a good idea. We're no longer, the location doesn't allow us to continue buying anymore, but we can exit because the price can still bounce here and go up, bounce there before taking off. So to avoid it coming and eating at our profit, we're just gonna exit and watch what it does. If it breaks the trend line, at least it opens the room. We know now that the opposite structure to be hit is this one. We still have enough room, then we can look for reasons to go short and catch that move to the next area of support. So that's all that you have on daily. That's all that you have. So let's look at H4. That's where it might get a bit messy. So on H4, let's remove the trend line from daily. On H4, we can see that I would personally put the trend line here. It's not very like smooth, but we'll just have to have something. So I'll put it there and say we were going up, we had a trend line, and the price, you can see it failed to give us a new high there, and you can see we're too close to the weekly area of resistance, meaning we were not allowed to take a buy from there. That's why knowing where you are is very important. Even if a trend line looks nice, a zone looks nice, but if the price, when it's coming back to your zone, is coming back from a higher structure, it's not, it's less likely that the price is going to respect that. It can, but less likely. So you can see that even the price action, the candlesticks, they are no longer very nice. So you can see that maybe if you're saying you had like a pull up, push up, a pause and a push up, and then it came back and then just did that. So the market pause has been taken out now, which means on this H4 the price broke the bullish trend line, this one, and it broke the support in a form of a market pause, which means the sellers are very strong. I think it's more like some of them have already been activated because of what we are coming from weekly. So meaning if you were to take trades, now we're saying on H4 the next opposing structure for you is going to be this one, but you can even take the one that is inside the daily, because we said the daily is, the higher the time frame the better. So you can say this area here, this new area here, we have a new area there, which is the one that initiated this move and broke support and broke bullish trend line, which means it's a very strong area. That is why this pushback to it was a good area for you to look for, to sell there, and hope that it's just that it's been playing around there and hope that it will drop. But the fact that we sort of we were coming down and then all of a sudden we pushed up there, this has to be your TP1. Even though you are targeting the next opposing zone, this has to be your TP1. Then you can have this as your main TP. Because what if whatever that caused the price to do this caused the same thing again? You can see it did that, because the price here, it came back but it got rejected. So that's why you need to know this area, so that you know where you are going to place your TP. It's very important. Knowing where to enter is as important as what? Knowing where to exit. It doesn't help in you being in the trade but you don't know where you're going to exit. So I think that's all that we have. But from here, what is it that we can do? Let's see. Because you can see that the price, it did this, this, meaning it has like a sort of like a lower low. You can have like a short-term trend line there. You can have it like that, but we can't take trades from this one because the price just formed the level and then it came back with one candlestick. The next candlestick went back to the level. This is not a good sign. The sellers seems to be there, but the buyers came back quickly. I cannot trust the sellers now, because they must take off and play there before coming back, so that I can see that they are comfortable with the move to the downside. So it's not a good sign. So we can say that currently there's a higher chances of the price moving to the downside, but on this H4 we don't yet have like a good structure for you to try and take a trade. But we do have what do you call this? We can say the sellers, they've got higher chance. Like this coming week, this thing has got a higher chance of dropping. It's just that it doesn't look as nice as Nasdaq. So I'll try and update you again maybe on Tuesday after getting a few more candlesticks here, just to see if they're gonna change the structure and break to the upside, or if they're gonna go down and take out this low. Then if this is taken out, then we can have, we can start planning there on how to capitalize until the price gets here. But if it doesn't get broken, we just don't have like a nice area to take sell trades or to buy because of what? The location. So I think that's all that we can end it like that. I would say let's just be patient with this one. Let's wait for few candlesticks to form, then we'll decide on where we're gonna go. But we are leaning towards the sellers, but they need to take out this as well for them to create a big space. If they don't take this out, the buyers are not yet fully out. All right, I hope you learn something, guys, from these videos. You need to know how to mark these levels. You need to know how to identify them, and you need to know how to take trades from them. And when you're in the trade, again, you still need to know where you're going to be exiting. All right, I hope you learned something. I'm gonna end it like that. I will try with this one. I'll make sure that I come back to it sometime, maybe Tuesday or Wednesday, after we get like a few candlesticks here. Then I will update you guys. All right, cheers. I'll see you in the next one.